Hi, everyone. Welcome to this week's 30 by 30. I'm Meredith Walker. I think I know everyone on this call, Executive Director at the Texas Business Hall of Fame. I'm so thrilled we're hosting Robert Duncan today. We're going to post his bio. I think all of you have read it. He doesn't need much of an introduction. He is the founder of Transwestern, which is one of the largest global real estate companies and we are so proud to have inducted him into our organization in 2010. I'm not looking at his bio. I hope that is right. That is correct. In addition to founding Transwestern, he's hugely involved his alma mater, which is UT Austin. Y'all can read all about him in the chat bar if you didn't in the invitation. So, Mr. Duncan, thank you for being here today. And we're grateful to have Joseph Cabrera back to moderate this for us, a UT Austin alum of ours, the founder of Cabrera Toro and the Professionally Offensive podcast. Since we're getting started a little late, I'm going to turn things over to you, Joseph. But of course, I want to thank our sponsor, Messick, Peacock and Associates out of Dallas. Thanks so much for their support for this program. It's been a lot of fun, and I know today's going to be great. So take it away, Joseph.
Yeah, thank you, Meredith and Mr. Duncan, and for the rest of the group here, thank you so much for being here today. Just as a reminder, if you have questions, we usually break this up into two, especially for any of y'all new to this. First 15 minutes, we're going to go through some rapid fire questions there with Mr. Duncan. And then the second half of it, we'll open it up to you all to ask whatever you want. Just go ahead and just send it to Meredith, usually just a straight question on the chat. She'll let me know and then we'll call on you. But let's get started. Again, Mr. Duncan, stoked to have you on board here today. And we'll kick off with what's been your greatest achievement to date?
Okay, now I'm so happy to answer those questions, but I first want to just say I want to thank you, Meredith, because you've done such a great job of bringing the Texas Business Hall of Fame together and expanding that footprint through a lot of really great idea flow, and it's more collaborative than it's ever been, and it gets better and better all the time. So I want to compliment you, and then I just first of all thank you for even having me. I think this sounds like a bunch of fun. I'd love to visit with the group and answer any questions you have, help you any way I can. But I want to also just compliment the group, because each and every one of you, I understand, are award winners that were awarded the scholarships from the Texas Business Hall of Fame. And that just means a lot, because I know a little bit about how that selection process occurs that makes me appreciate you. So congratulations to each of you. So Joseph, I'm sorry, what was your question?
Oh, that's good. Well, thank you for the intro. You got us all hyped up and feeling good about ourselves. So that's great. No, on what's been your greatest achievement?
Greatest achievement, that's an easy one for me, is talking my wife Marcy into marrying me. Because if you've got a wife, or if you're a spouse like I do, then it makes it not only makes your life so fulfilling, but she's been a big part of any achievement or success I've ever had, including our family, or I should say beginning with our family, but as well just so supportive and so forth. So that she's kind of the centerpiece of our family, and so that would be my biggest score so far.
Yeah, it's a killer answer. It always boggles me, like when people go up and get awards at the Oscars and they always forget to thank their other half. That's probably not a good evening for them when they get back. So good answer, Mr. Duncan. Thank you for that, and a good reminder for all of us. Historical figure, someone you'd like to meet.
Well, it's funny. I guess all of us has probably thought about that, because that's kind of a cocktail question sometimes. For me, it would be Jesus Christ, because I mean, my gosh, I think about the oh my goodness. Of course, we're Catholics and have deep faith. So that accentuates that. But just the idea of just having an individual that's had that big of an impact on the world. I've always thought when they said, could you go have dinner with anyone, to me that would just be amazingly fascinating. So I've heard that before, so I would just tell you that's kind of a canned response of mine, because that would be like number 1 through 10.
That'd be an answer for a lot of us too. In that same vein, obviously probably different caliber now, especially when you set the tone with Jesus there. What about a public figure you'd like to meet and have dinner with? Anybody you admire or look up to?
Well, I'll have to say, thinking about that one, gosh, there, any number of them kind of come to mind, but it's so interesting because I'm a big fan of Glenn Youngkin, who is the governor of Virginia. And I'm not whether you all have followed him or listened to his thoughts or comments or whatever, but there it's kind of interesting because I actually do have a personal relationship with him, because he was CEO of Carlisle for years and years, and then he retired to go into public service. And so he's he's all in. He just had that much drive and that much passion toward public service after all those years. He was there. He retired in his 25th year. And then I think he's done so much. Of course, keep in mind, I know we all have varying political perspectives, which is wonderful. But mine being somewhat conservative, I've seen. I feel like he brings so much to the party, because rather than this big, I bet you all of us, I know I am, are really get kind of worn out and tired about the faction, the different factions and the separation and that's occurred, divisiveness that we see today. And if you hear him and think about him, even though he's a conservative, he's a consensus builder and a caring individual that I think could bring more unity to people. So I've just seen he just seems to find the common good in people, and he's driven by that. So, and I happen to know him. So to me, I just think a lot of him.
No, that's great. It's always fascinating to see someone cross that chasm from the private sector into the public sector. I always kind of wonder why, sometimes, because it can be kind of a thankless kind of job, especially for the wrong person, but that's somebody definitely to look into. So thank you for that.
No doubt. Yeah.
On the treasured possession side, you've probably had a lot of things in your life, but is there something you really value the most, tangible or intangible?
Well, that's an easy one for me too. Now, my family is everything. So we've got, Marcia and I have 6 boys, and they're all and thank God above, we're very close. We're a very close family. And all 5 of the working age sons work for us. So I get to see them every day right here on the same floor. And so I get to see see them every day. And then we have our youngest is actually still at the University of Texas as a junior in undergraduate school. So shame on us if we can't pull him into the boat when he gets out of school. So we're hoping to join him into the ranks, but he's in school having a big time, and we're working, but clearly, and then I'm already mentioned to you, my bride's kind of in the middle of everything we do. So we're blessed to have a wonderful family, a close family, and that is, far and above my most valued possession, if you want to call it possession.
No, I think it very well could be. It's maybe a little bit off script. How is it working with all the family? Is that something that was kind of an expectation from the beginning, or they just kind of came to you guys on your own?
That's so. I'll have to tell you, it's going really well. Now I've had the, we had. I was a little bit older when I got married. I was 37 when I first got married, and then so we had our kids a little bit later in life than some. So it's kind of interesting. I've had the benefit of having a lot of friends that I was able to draw from over the years, many of which had their own businesses. And so I had some really good advice along the way of some proactive things you can do to try to integrate that. And so we've tried to be pretty intentional there. So rather than just kind of let things happen. So we've gotten them involved. We have normal, meetings and sessions where they're involved in the strategic planning of all of the family of companies and so forth and so on, in addition to their sort of day job, if you will. And so it sort of slowly has empowered them to gain a better perspective and do better in what their specific role is, but also grow into perhaps a bigger role. And so it's going, it's going well. They're all in different aspects of the business. We have a family of companies, so we're in we have a development company, and there we've got meaningful verticals and different product types. Our foundational two verticals are the apartment sector and the industrial logistics sector. We do other things as well. Healthcare and life sciences and so forth is one. We have the office sector, but you all are aware of what's going on there. That's a tough place to be. So we have the development company, and then we have an investment management company, Transwestern Investment Group, and there we co-invest with big institutional investors. And so that's an acquisition and investment company. So we've got, and then we have a services company, which is involved in the diversified services in all the major cities. And then we do property management, leasing, brokerage, investment sales, and so forth there. And then we have a hospitality company, hotel company, and then we have an opportunistic ventures company that does joint ventures with other operators in real estate. And so between all of those, they're kind of able to get into the different companies and do different things. So bringing the general perspective to each one of those businesses. But
yeah, that's great. I think some of us probably on this call right now are always apprehensive one way or another. Working with families is a good call, so it's always good to hear. I'm sure folks will have follow-on questions about how you make sure that's a healthy dynamic. Speaking of dynamics,
make a note on your calendar. Call me in about 5 years and ask me that same question. I'll let you know. I may have a different answer for you.
I'm sure there's days, right, where you're like, maybe this family business thing is a little too, not worth it, messing things up at Thanksgiving. So yeah, no, that's great. I appreciate that. How about a personal model, sir? Do you got one that you live by?
I honestly, what a great question, but I don't. I need to think of one. This is going to be an interactive call. I'd love to hear some. I haven't really crafted what I would call a personal motto, but so I got to think about that one. Yeah, if you think of a good one, let me know. I guess we all have foundational philosophies that we go by. So we all have those, but I don't really have a motto, if you will. I need to think about that.
I heard a really good one. I'm not really supposed to be interjecting, but
please do.
Do you know Greg Armstrong?
Yes.
So Greg Armstrong's one of our legends. He founded Plains All American, and his motto, or something I read and something he sent me, was always do the right thing even when no one's looking.
Oh,
I like that.
Isn't that great? I've heard, it's not my motto, but it gives me an idea. Maybe it should be, but I've heard a similar take on that, which said that you can tell the character of a person by how he treats people that can never do anything for them, which I think is kind of neat.
That's powerful.
It's kind of easy to treat a big client well, or someone that you're trying to get something from. But if someone can't do anything in return, and how you treat them, I've heard that before, and which is a good one.
Yeah.
When and where are you most happiest? I know we talked a little bit about fishing before this call, but I'm curious.
There you go. We had a little. You're probably going to guess this, Joseph, because of our visit earlier. But we have a ranch that we just thoroughly love in South Texas. it's right, but we have a lot of new visitors every day. We don't get to see them very often to get very acquainted, but they're coming across the Rio Grande River. We're right on the border, and we're fairly close to Eagle Pass, so we're kind of in the heartthrob of some of the toughest immigration going on. But it's thank God no incidents over lots and lots of years. But being down there, it's a pristine, very wilderness area. So you're in the boondocks, so to speak, and so we all of our boys love it down there, and Marcy and I do too. So we get down there, it gets really hot in the summer, as you know, deep South Texas, but for 3/4 of the year, it's wonderful. And so we being down there with the family is really probably one of my favorite things.
Yeah, no, South Texas got its own charm. I think it's no mountains or anything else, but there's just something about its vastness and some killer Mexican food that makes it a really good place to be. So, talent. What talent would you most like to have? Is it something you're not great at, but you wish you were?
You know what? That's an easy one for me too, because to tell you the truth, I've always wanted to be a good manager, but I'm just not. I've never been. I'm just not a good manager. I've always had to surround myself with good management, because I can get some ideas. I can push the envelope and maybe connect the dots sometimes, and we've been able to grow the companies and successfully, thank God. And but just the follow through, and because people always talk about the value of leadership being, it's not, they say, what, you want to be a leader or a manager, and sometimes it sounds like you're sort of underplaying the importance of the management role in favor of leadership. If you read leadership books, there's something, it's like the why and who you are and whatever, in the leadership, which is huge. But I've never seen a successful business yet that it wasn't properly managed, and it's not my strong suit. And so I probably thought I was a great manager until my wife, after about beat me over the head about 25 times, I figured out, I finally agreed with her, said she's right, but she's always said, you're terrible manager. But she was finally, I said, okay, you won. But so yeah, I've always wanted to get better in that area.
A lot of us can resonate with that, and it's probably a fresh breath of air for a lot of us to hear that you could still make a Transwestern and still be, working on being, a good manager. So I kind of, as we round out, and just as a heads up for a lot of other folks, just get your questions ready and fire them off if you have any. This is the last one before we turn it over to the audience. If you could change one thing about yourself, what would it be? And it might be similar to the answer you just asked, or the thing you just provided, but is there anything else in your mind that you wish you could change?
Everybody, maybe y'all can identify with this, but everyone on this call is probably, what do you want to call? What do you call it? Type A, or you're pushing the envelope, or you wouldn't have achieved what you've achieved. You wouldn't have gotten that award. You wouldn't have competitively excelled, and you can get so much on that track. And if you're a competitive person and you like to make things happen, and you're driven by business, and it's contagious, it's kind of builds on itself, and whatever, so you can get, and a lot of times I feel like I can get so immersed in what I'm doing that I don't take the time with people, because I bet all of us are the same way. We really enjoy just people, or you wouldn't be as successful as you are. But that's a sacrifice that I feel like I've always had to pay, is that I don't have to manage my time. I'm trying to figure out, okay, there's going to be a phone call. Are we talking about a 5-minute or a 7-minute or a 10-minute call, or, when you, or, a 15-minute meeting, and it's just trying to get everything in and doing everything and trying to be efficient. Sometimes you lose that personal touch. And I see some people that have built businesses and things that have managed to, I bet Meredith, I bet you can almost name them. I could too. Some that I've go, how do they do that? Because they just seem like they got all the time in the world. They're the nicest people. They got all the time in the world, and they'll take the time to talk about something and whatever. And yet they'll go right back and they'll make big decisions, make great things happen and whatever. But I've never been able to achieve quite that balance that I would like. It seems like I've always kind of, seems like I grind a little much. So sometimes I wish I had a more inclination to maybe slow things down and enjoy the moment or enjoy the time I have with people. Sometimes you can get kind of carried away with that. So that would be one thing I would work on or try to change something.
That's so interesting, because I would describe you as one of those people, Robert.
No.
You're doing this right now.
And looking at your bio, you seem to make time for lots of different things. I always say, if you want something done, ask a busy person.
Well, then there's something to that about getting something done. But I bet you know what I'm talking about, Meredith, because you're a busy person, and I know all of you are. But it's just taking the time with people is so enjoyable and so important. But it's just sometimes you just don't find the time to do it.
One thing I've noticed among our Hall of Fame members, including you for the record, is they never seem like they're in a hurry when you're in conversation with them. And they must be. But that's like a common trait among the super successful. You never feel rushed in a meeting with them. And I don't know what that gift is, but anyway, I know we need to turn this over to the audience. So.
Absolutely.
All right. Well, we got a few in the queue here. So I think,
okay.
Let's see, Hazem out of Houston. Go ahead and just introduce yourself, maybe just your company and what you do, and then fire away.
Hi, Robert. My name is Hazem. I'm actually sitting in the family business. It's called iFloors. We're a retailer for flooring, cabinets, and countertops. And that's a family business. There's another business that I'm working on that's a development in a smart home company. So it's all real estate. But my question is, at interesting times like these, a lot of changes in economy and industry, I find it impressive that you're into all different kind of sectors of real estate, apartment communities, homes, healthcare, commercial, retail. So I was just curious, which out of those sectors do you see has the most promise and excitement and innovation going forward?
That's a great question, and congratulations on your success. Well, you always look, you in the real estate business, I guess you want to go where you want to fish where the fish are biting, right? And so you're wanting to go where the action is, where the demand is, and right now I would say the industrial and the logistics side carries a lot of promise, because if you look all around, you've got natural supply and demand factors out there, but every now and then you get sort of a curveball or something that's kind of a mega trend, and you're all aware of it. Of course, you've got you've got the online shopping as opposed to the bricks and mortar shopping, which is kind of an old story by now, but that seems to be continuing, meaning what you've got is, in addition to what you've always had, a reasonable demand for, just with growth and population and prosperity, more things, more stuff, more things to store and transport and so forth. So you've always had that demand, but it's really been pretty amazing. If you look at the statistics on the amount of absorption of logistics space. It's nothing like it in my career.
Really?
And over the last, say, 10, 15 years. Fortunately, it's the very first thing we did. 45 years ago, this is our 45th anniversary this year. 45 years ago, that's how we got started. Built a spec warehouse here in Houston, Texas, 100,000 square foot warehouse. And then kind of went on from there. So the industrial's been in our blood for a long time. And that's a big vertical for us now, is these logistics. The demand there is exceptional. And even though we've had, and everything's impacted, don't get me wrong, we've had as you know, we've had interest rate increases that greatly increased the cost, but also the financeability of properties. And it's been a real devaluation because it's also given the cost of long-term debt. It's because of that alternative. It's raised the cap rates and increased the cap rates, thereby reducing the value of your income streams. And so that's been a real dilemma in all product types. Now, on the industrial side, our rents have exceeded our rents have exceeded the diminution of value from the cap rates.
Really?
So we've had rents last year nationally in industrial rose about 18%. So you've got an extraordinary demand that's driven a lot by that online shopping. And even though you hear about, Amazon cutting back, which is true, and this and the other, in the scheme of things, it's just a really big industry, and the vacancies are low and the absorption is high. The rents are still, it's the only sector that I know of where rents are still moving up a bit. They flattened a bit, but I mean, they're still moving up. So you look at that, coupled with the fact it's somewhat specialized, meaning you've got certainly a lot of people building them, but it's not like you have more, a little bit less competition there than you probably have in the apartment sector, certainly on the office sector when that was a deal, or retail. So I would say that sector is very strong. Apartments are very strong demographically. So even though right now you've got an overbuilding going on in apartments, you've got all those other factors that are reducing the value and creating liquidity problems, especially recently with the regional banks. But you got all that stuff going on, but your mega trend there is outstanding because you've got pressure on home ownership, and so you've got that factor going, with you, and so the apartment sector is a very solid sector as well. The office sector, it's brutal in capital letters. It is a real dilemma because you had too much space kind of anyway with the pandemic, and no one knew exactly how that work from home scenario was going to play out, even though you're going to see more and more work back at the office. And it's already happening. Still, they're cutting back. And so forth. So that the demand for space is going down. You've got an oversupply. Now you dial the fact that forget how many trillions will be. It's trillions are going to be will need to be will be refinanced this year and next. But when you a lot of those are on 5-year loans. You go in there in a 5-year loan, you borrowed it 3.5, and now you go back to refinance it, and then they say, what about 8.5? And you dial that on top of a 30% occupancy level, and you're going to see massive foreclosures in that area. But but anyway, but yeah, I would say the industrial sector. Now I'll tell you, we're in the hospitality sector, and I will tell you, the hospitality sector is really a brilliant area for us. We acquired this wonderful little hospitality company based in Denver kind of a diversified scenario. We're acquiring boutique hotels, we're going to build them. We just bought it a year ago. But what's interesting is they made their bones, so to speak, by a component that we call venue activation, where they had gone into several of these mega projects. They're deep in the food and beverage space, so they went into these huge projects where they were able to like Penn 1 in New York, basically Madison Square Garden. They went in with related companies and reimagined the first floor areas, lobby areas, and interactive areas, and put in the food and beverage and so forth. So they had done some of those around the country, and that was what interested us, because we don't own the buildings, the office buildings, thank goodness, but we manage a lot of them, and nationally. And so a lot of our investor owners are trying to get employees back in their buildings, and they're trying to increase their occupancy. They're trying to create a desire to be there. And so they're looking at ways to do that. So we made a serious business. And it's a big growth business right now, about coming in and reimagining lobby areas, central areas, and making office buildings look like hotels with restaurants and bars and scenarios. So we're into the amenity management now of that area. So that, I'll have to tell you, that's when you look at all you gotta do is look at the sales on food and beverage nationally, especially in the major centers, to see how important that component is. So that's a big area. That's
an interesting one. Yeah.
But,
I think the hospitality one is one that I'm also very interested in, because it has a design aspect to it, where you can, improve the design and experience of tenants. And with smart environments, that's something that we do heavily is, focus on the design. It's in a partnership with a designer that has a ton of experience. So, but that was really helpful insight. Thank you so much, Robert. Yeah.
Very welcome. Very welcome.
Yeah.
Robert, we probably have one or two in the hopper here, but I know we're over time. Do you have a few extra minutes to answer those? And if you have a hard stop, that's no problem. Okay.
Absolutely.
Great. We appreciate the time. Well, then I think we next want to go to Garrett there out of, is it Houston? Garrett, are you calling from Houston?
You got it. Yeah. Calling in from Houston.
Hey, good.
Yeah. No, thank you, Robert, for your time. Mr. Duncan. Yeah, I had the pleasure of meeting your son, William, out at UNC when I was looking at MBA schools, but
Seriously.
Susan Rice.
That's great.
You got it. But no, also a UT alumni. But
that's a great school. Goodness gracious. I was so impressed with that. Yeah, so impressed with them.
Yes, sir. You got it. Thank you. Well, so I'll kind of go quick. For, I guess, a young commercial real estate, entrepreneur and developer, really there's no direct path to getting into the development side. But I guess more or less, how would you recommend, or what would you suggest someone, get into would they do the property, management, the leasing, the brokerage, or kind of go straight into development? I know the development's kind of the prized possession everyone tries to go after, but I see myself. So currently I work for a small town GC and developer in Sugar Land, but I think in the future, obviously I have hopes to kind of develop my own stuff as well.
Well, come talk to William. First of all, come talk to William.
Okay.
And I mean, gosh, especially with being you're one of the scholars, right?
Yes, sir. You got it.
Oh my goodness. Well, first of all, go, if you know William, go holler at William.
All right.
What's interesting is it's interestingly, and I think you're right. The development side's a little bit tougher because you're to get it. There's a lower barrier to entry to get into like brokerage and all these kind of things, because a company's going to say, okay, look, we don't pay much salary. You're kind of on your own. You eat what you kill, and you go in and you kind of start. A lot of people start in the brokerage side and all that stuff. You got a desk there, and you're kind of on your own. Kind of thing. Whatever. Be careful there, unless you gotta. Whatever you do, you're really there right now to really get LinkedIn and learn a lot in a short period of time. And you want to always be with the right kind of people. You already know that because this whole group knows that because of your achievements. So getting with the right people, the right mentor is way more important than exactly what you're doing. And so that'll take you but interestingly, you think about easier to get into some of these areas when everything's going well. But I would tell you that when things aren't going so well, like right now in the development side, things are slowed down so much that you've got a lot of companies out there that are running scared, that are undercapitalized, that have very interesting situations going on and whatever. A lot of need out there, and you could probably add value. And so I wouldn't count that out, getting with the right scenario and development. But certainly the services side is an easier barrier to entry. But I would say the development side, and then also the acquisition, the investment side is really worth looking at. Worth looking at. There's just so much going on there. There's so much change going on in that area. I would say we're probably right in the middle of a little bit of a transition there. That business has always been there, kind of. If you're in the big institutional investment management side, that's where we have, as an example with our company, we have the special accounts, which we basically perform for big investors. We're their investment arm, if you will, and we just get paid a fee for doing that. And then we have co-investment where we sponsor an investment strategy, and then we co-invest, go raise capital for that strategy. Those two different things. But the area, because so many big institutional investors don't want to make a mistake. Candidly, they don't want to be criticized either. It's easy to pick a Blackstone. And it's easy to pick a Brookfield and so over the past period of years, last 10 years, you've seen these phenomenal capital raises by the Blackstones and the Brookfields of the world and the Starwood Capital and whatever. So you may be only 6 or 8, and they call it the haves and the have-nots. Everybody else is scrambling because their institutions are going, well, am I going to take a flyer on this, this new company or whatever, even if you've been around, maybe it's a smaller company or something in it that is not as well known. But what's so interesting? You got an interesting phenomenon going on is that there's a lot of focus now on product type specialization. And instead of wanting to invest with a Blackstone in their big general fund that does their diversification for you, because they do a little bit of everything, doing a life sciences fund where they're thinking that this is a great, I want to pick my flavors here because I believe in these concepts or something like that, or I believe in this kind of a investment vehicle. You're seeing more and more of that. And then you're seeing, interestingly, more interest in owner operators versus just allocators of investments. And then finally, I would say for the first time this year in the history of real estate investing, private individual high net worth private equity investment in real estate, for the first time in history, this quarter outstripped institutional investment in real estate. So you've got a lot going on in that arena now, and it's more diversified, it's more eclectic, it's more entrepreneurial than it was, say, 10 years ago. I would think about that. Ask William when you talk to William about it.
Sounds good. Thank you, sir.
But anyway, I just keep plugging, because if there's an area that you're interested in, I just keep plugging. You might find the right spot.
Awesome. Thank you.
Right. Henry out of San Antonio.
Mr. Duncan, thank you for your time. I had the opportunity last week to hear a talk from an economist from the Federal Reserve Bank in Dallas, talking about the state of the economy. And really, he was predicting, pretty certainly in his mind that the U.S. economy will go into recession the second half of this year. But interestingly, he said, almost certainly Texas will not. And as a proud native Texan, like I'm sure this call is full of, it made me happy to hear that and proud to hear that. I'm curious about just like, as you think about the Texas and our support for business, what do you appreciate about Texas that sets it apart, that allows us to continue to thrive even in challenging times nationally?
Gosh, I think you're right on, Henry. I think you're right on with that. We're very focused on Texas. It helps having been based in Texas and being here for a long time. But I'll tell you, it's real live, real time truth. Meaning we're in 35 cities. You look around the country, Texas is our biggest, our best metrics. And it's not just because, we're here or whatever. If you look project by project, you look at, rents, absorption, whatever else. And there's just no nonsense. The migration here is strong. It's always been strong from a right to being a right to work state. Texas has always been open to business and pro-business and so forth, but also the relative cost of living in most of the areas of Texas. So there's just a lot of we see that, and we see a real mega trend there. So we think Texas is very strong, and it will continue to be. Well, even in Houston, Houston's viewed as, from a real estate perspective, is a little more volatile, say, than a Dallas. Probably for good reason, because the energy business has been up and down and all around for years and years and so forth. Now you look at this sort of mega trend, oh my gosh, green energy and all this stuff. What's going to happen to these oil and gas companies and so forth like that? But what's pretty amazing, right here in Houston, of course, Houston sort of goes back and forth with Dallas on being the top migration beneficiary. Sometimes it's Houston, sometimes it's Dallas in the metrics. Houston's probably number one in that for the last in 2022. I don't know for sure, but even in Houston, which is viewed, a little bit more skeptically by some of the institutional players, is seeing excellent growth.
Mm-hmm.
How about this? From a supply and demand, absorption, vacancy, and rent scenario, right now Houston is the number one logistics ranked logistics market in the country. Wow. Meaning, if you just look at the current metrics, because now part of that's because they haven't had the huge building that you've got going on in Dallas and the Inland Empire and some other areas. But it's helped that. But that's a factor. Who was it the other day? Prologis is the largest industrial player, out there. They're going really long in Texas because they say that they're projecting that, given the land prices that are occurring on both coasts, that more and more distribution is going to occur in the central part of the country, and they view Texas as the number one market, number one state. So, and that's just one sector, but no, we're very bullish on it. I think you're exactly right to do that. I don't know what to make I don't know what to make. Have you ever read the Linneman letter?
I don't think so.
Yeah. Well, see if you can get a copy of it. So okay. Usually they're pretty tight with you. You have to subscribe to it. See if you can get a copy of the Linneman letter. He's probably the best real estate economist historically. He's terrific, and it's kind of interesting. But he's first and foremost an economist, but he sort of specialized in real estate. He's betting against I just read it yesterday. he's betting against a recession, even nationally. I don't know what to, I've personally felt that we couldn't have, so many things have happened. We have to have a recession,
No.
but
Yeah.
I'll have to tell you, he's one of the most, he's thinking, I mean, and he writes out all the reasons why, but it's interesting. I'm not, but I would say this, I think the biggest issues are going or in valuations and say in real estate right now, I'm speaking kind of real estate, but as far as translating to what looks like a serious recession, not seeing it yet.
Okay. Interesting. Thank you. Very interesting.
Right. Thank you, Henry, for that. And thank you, Mr. Duncan. We got one more.
Okay.
See our chairman there, John Caton. Go ahead and fire away and we'll close this out.
Absolutely. Thanks, Joseph. Mr. Duncan, thank you very much for your time and extending your schedule.
Absolutely.
One, should be two big congratulations. One, it's for the 45 years that you mentioned in terms of the anniversary for the company.
Thank you.
But really, I don't know if this is even a bigger congrats, but raising six kids, independent, educated, working. I thought I had challenges with 4 kids, but
Hey, you got 4 of them, huh?
that's right. So we're still at the early age. So I
Good
don't
for you.
I don't know if I've screwed them up or not, but we shall see.
Spend as much time with them as you can.
Exactly. I try to. That's one reason why I have this black eye. I think I spend a little too much time with them. But, to my question, Mr. Duncan, there's a comment out there in terms of fail forward moments. And so these are time periods where they didn't go your way, but when you look back at it, actually something better took place when you went a different direction. Talk about it, whether it's from a personal side, we talk about family, or from a professional side. What was your biggest fail forward moment?
Ooh, that's a great question. First of all, I believe in the concept. You're exactly right. And I think that, in fact, I gotta tell you, we've had a bunch of them. But one I kind of think about that maybe you can relate to a little bit, which is kind of interesting because it sort of changed the course and direction, destiny of our company in business. So I've had them in personally as well, as I'm sure all of you have. But I believe in the concept. But interestingly, we started in '78, and we were pretty prolific. We great markets. Everything was, we had good financing, great demand, population growth, and good absorption and all the product types. So we went pretty hard at it. And so we built, something like, 5 or 6 million feet in about 5 years. And we, they say your IQ goes up and down with the market. Sometimes good markets make you look pretty smart, and then all of a sudden you realize you got the dunce cap on and you're in the corner. And that happened to us. And so we were thinking we were rocking and rolling, and then the mid '80s hit. So in 1986, the price of oil went from, we were based in Houston, all of our assets were in Texas, and we were the price of oil went from, I guess it was something like 30 to 6 in about 60 days or 90 days. And then that wave went over all around the country. But it was brutal because we went from having, thinking things looked great. We had free and clear land. We had buildings that were cash flowing. We had new buildings under construction with people throwing offers at us. And we were thinking, well, plus we got to be smart, right? Look how great we are. And then all of a sudden when things turned totally upside down, and then all the banks went broke, Texas banks, and then had all this other stuff going on nationwide. But the Southwest was hit the worst. That's why they call it the Southwest Plan by the FDIC. But it was brutal. Well, we were nothing but development, and we did nothing but development in Texas. So we went from rocking and rolling, it seemed like it in 12 minutes, to scrambling for survival. And so we try to make the decision. Do we just basically shut down, keep a handful of people and sort of wait for what we knew, what to do, how to develop, or do we keep our good people? We thought we had really good people, and do we try to figure out where we can add value in the marketplace? And we chose door number 2. And so we went into the services business. Well, we were able to handle our financial affairs, and then were able to do it early on. So when we were up and running and financially settled and had all of our people, then all these massive foreclosures started happening because we had a lot of good company out there. We had it was happening to everybody. So that's when our company took off. And we ended up hiring, maybe during that foreclosure era, we probably hired 750 people to 1,000 people, maybe in a matter of 18 months, to pick up foreclosures and manage and lease these buildings. And then we ended up getting in the brokerage business when we had to sell the building. So we ended up saying, hey, we can do this, sell the buildings. And then we built a services enterprise around this debacle. And then we cycled back when the markets changed into investment, opportunistic investment. And then back when it really circled around, equilibrium came, then we went back into development. And then we grew, and then we figured out that what's interesting, all of those businesses could really draft off each other. So we integrated them to the point that it helped us raise capital. It helped us, develop buildings, find tenants, do things. And and that started with a grueling, terribly depressing, situation. It looked like, what in the world are we going to do? And so I think about that because without that, we wouldn't be the company we are today. So it wasn't out of choice; it was out of necessity that we ended up with that strategic plan. That's one I can think of.
No, that is fantastic. I appreciate you sharing that.
Sure.
Robert, well, thank you for your time, sir. I'll turn it over to Meredith for final closing thoughts, but it's been a privilege being able to moderate and pick your brain here for a little bit of time.
Okay.
Thank you so much.
My pleasure. Thank you. Congratulations to all of you. Meredith, you do such a great job. And Joseph, thank you for the great job today. I've enjoyed being with you.
Well, thank you for all your time today. And it's interesting because this was scheduled for 30 minutes. We went for almost an hour, and we lost very few people on this call. So I learned a lot, and we really appreciate your time, and we hope to see everyone next week. Next week, we'll have TBHF legend Ed Whitaker. For those who don't know Mr. Whitaker, he ran AT&T and then General Motors. He is, of course, a business rock star like Mr. Duncan. So that should be a very entertaining and engaging call. Would encourage you to register if you haven't already. And thank you again, Mr. Duncan. This was awesome. I hope everyone has a great day.
Thank you, Meredith.